this without raising one single penny on taxes on anybody making less than $400,000 a year. Let me say that again, be crystal clear. No one making less than $400,000 a year will pay a single additional penny in tax for all these things that were in the Build Back Better plan.
How can anyone believe that at all? The great Grover Norquist is here. He's the president of Americans for Tax Reform. Mr. Norquist, wonderful to talk to you, sir.
Good to be with you.
Is that true, what Joe Biden said?
He lied. He lied his way into office. But to be fair to him, the reason he thought he could lie like that and that the press wouldn't call him on it before the election or after the election is that the same lie was told by Bill Clinton. He wasn't going to tax anyone who made more than a certain amount of money, and immediately he did. Then Obama, I'm not going to tax anybody who makes less than $250,000 a year. 2 months in, he raised taxes on cigarette smokers, average income $40,000 a year. So they all say that in order to take the tax issue off the table, they believe. But I'm hoping that since the last 3 guys lied their way into office by saying they wouldn't tax middle-income people, and then did. Obamacare had a series of 7, 8 taxes that hit middle-income Americans. Biden's raised taxes on oil, on natural gas, on coal. If you heat your home, if you drive a car, if you have air conditioning, you are paying that tax. And then, of course, when you tax companies, 70% of corporate income taxes are paid by workers in lower wages or consumers in higher prices. And even liberal economists get that.
I wonder what let me ask this. What do you think we talked in the last segment about how inflation's a tax. So that's maybe the most insidious tax. I feel like the corporate tax is the most no-brainer one to get rid of. Like, what are you out of your minds? Is so ridiculous that we just get rid of that and we just have an explosion of investment in this country. Companies around the world be flocking to America if we got rid of that one. Which to you is the one that's like, oh, like we gotta at least lower this one?
All of them. But focusing on the income tax for a minute, you're quite right. The income tax is one of the most destructive tax increases. But it's one of the nicest from a politician standpoint, because you can be convinced you're not paying it. General Motors, some guy named General Motors will pay this tax, not you. The person who buys a car from General Motors, all of whose components are more expensive because corporate income taxes, not you worker for whom General Motors is short $1 million. 70% of their spending is on wages. Who do you think's going to be not getting more money this year? It's the perfect political tax and one of the worst economic taxes.
Help me and everyone listening right now understand what Trump did with the tax code and what Biden has done so far. Because I distinctly remember, I'll never forget, there was a press conference that Donald Trump gave where he announced tax cuts. And all these companies were coming out saying, we're gonna raise wages. Utility companies were saying, like competing with each other to see which could cut their rates by the most, or companies investing in 401k plans or higher education plans. It was like, here's all the companies were competing. Here's what we're gonna do with all this money to help you. And it was like this mad dash. I remember it was a fascinating moment. How do you characterize what Trump did versus what Biden's doing?
President Trump looked at the corporate income tax, American corporate income tax, 35%. China's at 25%. We taxed our companies more damagingly with a higher tax rate than communist China. The European average is around early 20s. We're competing with countries like Ireland, 12.5%, Hungary, 8%, a lot of countries at 10%. Somehow we decided that we'd be stuck up at 35%. That's what Bill Clinton took it up to 35%. And Trump said, let's take it to 15. And unfortunately, some people weren't willing to go as far as 15, but we got to 21. And that's made us competitive. We do need to go to 15 and then to 0. But the more we take that corporate rate down, the better workers get paid, the lower our costs are, the more competitive we are in the world. We want to be the country with the lowest corporate tax, not the country with the lowest wages.
What do you say to the people listening now who say, oh, if you lower taxes, that increases the deficit?
Only if you spend too much money. How does Florida function without an income tax, but New York has an income tax? It's because Florida this year will spend about $110 billion. Too much, but $110 billion for 22 million people. The same number of people living in New York will get 220, twice as much, $220 billion. And by the way, the one in Florida may go down and the one in New York may go up, but roughly it's 2 to 1 and has been for a number of years. And yet, they don't have better schools in New York. They don't have better roads in New York. They don't have more honest government in New York. They have more expensive government employees, ridiculous pensions, too many government employees. That's what you get for an extra $100 billion. Not service.
I used to live in Tennessee. Yep, I used to live in Tennessee, no income tax. I tell people in California, they still have roads in Tennessee. Like people can't fathom, like how could there be no income tax? How do things exist? What do you make of the marketing of the windfall tax? This is a new concept, a windfall tax. And I think the marketing is effective to people.
Well, yes. And what the left knows is when any time people think somebody won something through no effort of their own, a windfall, it just happened, the cash, manna from heaven, the cash dropped on my desk. You know, who knew? Excess profits tax. What do you mean excess profit? Well, excess, more than I think you should have. Excess. Nobody should have excess. You shouldn't drink to excess. You shouldn't do anything to excess, even make money. They like to delegitimize the resources that you have as an individual or that your company earns, and then people willingly say, okay, to take it away. In the same way, when somebody wins the lottery, all their neighbors call and ask them for money. When somebody gets a raise at work, nobody calls and asks them for money. He earned that. He or she earned that more money. The guy or the lady who wins a lottery didn't do anything, and everybody feels you don't really, it's not really yours, but money you earn is. So politicians first try and suggest you didn't really earn it, so we could steal it.
Great point. Everyone remember that. That's brilliant. Guys, we have a clip of the IRS. This is Joe Biden talking about more IRS agents.
They made it clear in legislation introduced to the investment we've made to crack down on tax cheats, billionaires and millionaires. The CBO says by doing away with those extra agents, we're going to cost the American public another $114 billion in lost revenue.
Oh, that's great. So how many agents was it again that Biden wanted to add?
87,000.
Okay, 87. So 87. Oh, I love thinking through the Democrats' brain. So 87,000 agents, which will cost X amount of money to hire 87. 80. The argument is they're going to get all this money from the rich tax cheats. So getting rid of those agents, which the House Republicans did, is going to cost us money because now the rich fat cats are going to keep that money that's really ours. Is that right?
Yes. But they know that's not true because in the past, politicians used to say, I want to build a bridge and my pay for will not be to cut spending somewhere else or raise taxes. Hire 5 IRS agents. Because I say, if every IRS agent can go steal $1 million, or take $1 million, then however many you hire, that's what I want to pay for my bridge. Well, what they discovered was that adding more IRS agents does not ramp up and get you that amount of money. And so they told them you can't use that as a pay for. That was years and years ago. Biden's still doing what they said was a fraud years ago.
Interesting. I didn't know that. Similarly, and good on the House Republicans for getting rid of those IRS agents. Similarly, this I don't know what people are calling it. I call it the Venmo tax, but it's this idea that the government is tracking any profit you make over $600. What do you make of that?
Well, that was such a bad idea, and so made people so unhappy and angry that when the Republicans said let's repeal it, they said, "Oh no, don't repeal it," and then they said we'll delay it a year. So they're hoping you'll go back to sleep and they'll let it click in. Or maybe, Biden loses and then he lets it click in after the next election. They are determined to do this. every single Democrat voted against getting rid of the Venmo tax, the PayPal tax. They also have something similar, because it's $600. Any money that goes in and out of your bank account for any reason, not just electronically, they want records of that too from your bank. They want your complete economic privacy bared. And they want to be able to walk through it and look at it anytime you want. And if you've noticed, the IRS has a very bad habit of handing people's political information, financial information on people they don't like, and handing it to their political enemies to have them go after with cancel culture, to have the newspapers go after them. Not that anything was done wrong, just to try and attack people and make their lives miserable.
Oh, the IRS would never be weaponized like that. Come on, Grover. But how can the Democrats at the same time say we're going to go after people making over $400,000 a year? We're going to hire these IRS agents, go after the billionaires. Oh, and by the way, if you make over $600, you need to report that.
Because they, as the president did during his State of the Union address, he said, I'm going to go after rich people. Everybody look over here. See, okay? And then at the same time, his Justice Department, his IRS, his Treasury Department were coming up with rules to go after people who work for tips. Very few people work for tips and make $400,000 a year. And so what their real work is to go after people who are waiters and waitresses and people who do your nails or cut your hair at a barber shop. They're going after them. But they want you to go, oh, look at the president's going after billionaires. He said so, with an unconstitutional tax that will never exist because it's unconstitutional. So he talks about the one thing, and even his friends who are billionaires, they go, oh, he's just kidding. If he wanted higher tax rates, that might be a problem. But a new tax on assets, that's not even constitutional. So it's just to fool the peasants into not realizing that's who they're coming for.
We mentioned briefly the wealth tax. I live in California. That's part of this idea too, is wealth tax. And then taxing you as you leave for the next 10 years, even if you don't live in the state anymore. So as you said, that's not constitutional. Do you think they're just throwing it out there as a flare, as a distraction? Or do you think they'll ultimately chip away at it until they can get that done?
They'd like to figure out how they might get it done. At the state level, it's very difficult to see how that could stand up to anything that gets in the way of people moving from one state to another. You can't even have things that interfere with commerce one state to another. That's one of the whole points of having a country instead of 13 colonies was no taxes at the border, no excise taxes between, we used to go through customs when you went from New York to Connecticut. Let's try and make a huge economy work that way. So the Constitution was largely set up to create one large market where people and goods and money could flow. And you've got a couple of failed states, California, New York, New Jersey, Minnesota now, bucking for that honor. And they don't see how they're going to get out of the mess they're in. They need to set up a little Berlin Wall to keep people from escaping. And the Weimar Republic had an exit tax. If you wanted to leave there, you had to pay a tax. So Germany's done this before. South Africa used to do this. I mean, they're countries that really make themselves the sort of place people like to leave have exit taxes. And California's going, we're kind of like South Africa and Weimar Republic in Germany.
Hey, thanks for watching that clip. We covered a ton in our Taxed to Death special. We talked about what taxes were in the beginning of our country, how people were taxed. It's much more moral and appropriate and fair and proper. Then the beginning, the genesis of the income tax in 1913, we had to have a constitutional amendment. So where did that all come from? And then the future of taxing. California, they want to pass a wealth tax and tax you when you leave the state. What is going on here? How different from our founding fathers' vision? That's all available on thefirsttv.com and the First TV app, a free download right now. The special is called Taxed to Death.